The recent rally has our next guest saying that the markets are indeed in a melt-up mode and that investors are getting ahead of themselves. We want to bring in Megan Horneman, who is Chief Investment Officer at Verdance Capital Advisors. Megan, you think we're in a melt-up? You think we're in the middle of this? You think it continues?
I think it could continue a little bit until you get some more clarity out of the Federal Reserve. But this is a concerning rally that we've seen. It's been very concentrated. It's basically pricing in perfection from the earnings standpoint. You can see that today with the decline after some disappointments yesterday. We're not buying into this rally. We're more concerned that the economic outlook isn't being reflected in the current prices, and we're a little bit more cautious here.
What concerns you? What's the downside risk scenario that you're thinking about?
So we still think that a recession is likely, and that we think investors got a little too optimistic that we can have this perfect soft landing scenario. So we're concerned from the economic standpoint in the second half of this year. Remember, the tightening lending conditions and then the tight monetary policy, that always acts on a lag. And typically you see recessions do occur after that. So we're looking for a recession in the second half of this year going into 2024. We don't think the market's reflecting that economic downside. We also don't think the market's reflecting what the Fed may do. I think what you're seeing in the recent rally in risk assets is actually going to scare the Federal Reserve next week. And I think the market's not pricing in the chance that they can come in with a pretty hawkish hike next week.
Meaning they hike and then they say a lot of things that lead people to think that there's another hike behind that?
Mm-hmm. Yeah, and I think they're walking a very fine line where they've done a lot of work on inflation. It's starting to do what they wanted to do, but again, this rally in risk assets, that can cause some of the work they've done to be unwound in the second half of this year. So they have to be very careful with how they articulate that next Fed hike.
You are still very heavily overweighted in cash at this point. Mm-hmm. Is that true?
Yeah, we do have a nice positioning, with dry powder so that we can put to work, because we do think that there's a decent correction headed our way in the second half of this year in the market. We think there'll be better opportunities to get into this market. We're not buying into this momentum-driven rally that we've seen.
If that's the case, if there is a serious pullback coming, I mean, how big of a pullback? You think this gets you back to what you could have bought at the beginning of May, what it gets you back to the beginning of March, what it gets you back to the beginning of January? How big of a pullback are you looking for?
Well, we think we could get some, between a 10 and 15% correction from here. And that's taking into the consideration that we think the PE multiples have gotten way too stretched here. The earnings expectations for 2024, we think are too stretched given our expectation for what the economy is going to look like. So we think we could get at least 10, 15% correction from here.
Okay. Megan, thank you for your time today.
You're welcome. Thank you.